Hello and welcome to today's CMS Forex Daily Market Recap. I'm Market Analyst Nick Nassad, and today is Tuesday, November 3rd, 2009. We start with the Euro-Dollar pair, which fell overnight as stocks in Europe were down, and there was risk aversion from news across the pond in the UK, where the government said that it would inject £31.2 billion of new taxpayer money into Royal Bank of Scotland and Lloyds Banking Group. There was also risk aversion from concerns after UBS posted a big third quarter loss. Overall, it seems that following a wave of optimism from March to September and into October, it's starting to become clear to investors and traders that there's still looming problems ahead in financial sectors around the world, as well as the recovery in some of the economies, especially in the US, because of the employment situation there. So the sharp slide in stocks in Europe was represented by these red candles here, where we fell below 1.47, which was our resistance from yesterday and also from last Thursday's trading. We had been trading in a sideways range the last 4 sessions, and today we broke below that, finding support at 1.4625 around the start of New York trading. We did manage to move back up into our sideways range late in the day above 1.47. The rebound here in New York trading came as commodities were able to advance and stocks temporarily did recover on news that billionaire investor Warren Buffett planned to buy the 77% stake in Burlington Northern Santa Fe Corp., a railroad company. That was the remaining shares that he did not own already. That news helped to temper some of the risk aversion from overnight, and we did see a bit of a rebound in later New York trading. The rebound here, if we plot a Fibonacci of our swing from high to low in today's trading, amounted to about 61.8%, and we are ending the day at a 50% retraction of this downswing. If we zoom out to a longer time frame, and get rid of this Fibo study, we see that from our rally in October, where we saw the euro move from 1.45 to 1.5050, we have now corrected about close to 78.6%, though we did not reach there yet. Today's fall below 1.47 represented a fall below the 61.8% retracement of this rally through most of October. In a look at the pound-dollar pair, we see that we fell overnight on the UK banking news, which we covered in our morning brief. And we did see, however, that the pound was able to rally rather strongly in New York trading, mainly as a technical play, as today's low, if we zoom this chart, was a 2-week low, and we had a pretty strong rejection of that level. A Fibonacci study here shows that today's high at 1.6450 was a 61.8% retracement of the fall in the last 2.5 sessions, and that just like in the euro-dollar, we're seeing a bit of consolidation around the 50% level of our most recent swing down. Now traders are most likely going to wait until the Bank of England decision on Thursday before we see this pair move away from the ranges we've been seeing the past 2 weeks. Switching to the US dollar Canadian dollar pair, we see that some of that reversal in risk sentiment, especially about in regards to commodity pairs, helped the loonie to gain on the greenback in today's trading. We had a test of 1.0850 here, which was the high we saw to start this week's trading, and this level was rejected rather strongly in today's trading. Today's low was very close to the low we had in last Thursday and Friday's sessions, and we seem to be in a bit of sideways trading now following a rally by the dollar since October 14th, when we hit maybe 16-month low at 1.02. Here, traders will likely wait for the FOMC meeting, which is scheduled for tomorrow at 2:15 Eastern, before pushing these pairs either up or down out of this range. If we zoom this pair out a little further and place a Fibonacci level from our fall here from 109.50 to 102, which was the first half of October, we see that today's support came around the 61.8% retracement of this rally. So we broke above this level, and now we're retesting it for a second time after we retested it late last week. If we take a look at the Australian dollar US dollar pair, we saw overnight that the Reserve Bank of Australia raised rates, but that did not help the Australian dollar, as the statement held no hints about a future raise in December. That hurt the Aussie and was part of the reason we saw a decline in higher yielders overnight. Similar to the other pairs that we've seen though, we did have a bounce up off support around the beginning of New York trading, and we did manage to pair most of the Aussie's losses. The low here was very close to our low to start Monday's session, which is kind of hard to see on this chart. If I zoom into a closer time frame, let's say 10-minute, we could see it a little clearer here. So this is the second time we've broached this level, though we did have a pretty strong rally from there. If we plot a simple Fibo level like we've done with some of our other pairs, we see that today's rally is a 61.8% retracement of our down move. So despite some strong moves overnight, we did have some pretty good corrections, and it seems that traders are most likely now going to wait for the FOMC meeting in afternoon New York trading tomorrow. And then for the pound pairs, it's key to keep your eye out for Thursday's Bank of England announcement. Now let's take a look at some of our upcoming releases. Tonight we get 3 releases from Australia. The services PMI, building approvals, and retail sales, while the UK will post its consumer confidence index and a measure of shop price inflation. Overnight, the Eurozone will post its final version of its services PMI, while the UK posts its regular services PMI, and Europe will finish off the overnight session with its producer prices. There are 3 key releases from the US. We have the ADP employment change, which is the curtain opener for the non-farm payroll report on Friday, as it measures the number of private sector jobs either created or lost during the month. We're also going to have our key services activity index, the ISM non-manufacturing index, and as I've mentioned, at 2:15 we're going to have the FOMC interest rate statement. The overwhelming consensus is that the Fed will hold rates near zero, but traders will be paying close attention, however, to the wording of the Fed's statement for any clues as to when it will decide to push interest rates higher. The main piece of language that might be changed from its previous statement would be that it plans to keep rates extremely low for an extended period. So if we see that bit of language removed from the statement, we will know that the Fed is gearing up to begin raising rates. And that'll do it for today's market recap. Thank you for joining me here at cmsfx.com, and happy trading.